Hi everyone, sorry for the late weekend video. I actually produced one Friday, but it went a little long, so I'm going to take YouTube's advice and scale it back a bit. Anyway, we're going to get started off with the NASDAQ, and actually the overall market, when you analyze it, we have to take into account the end of the month, end of quarter volume skewed, the totals that came, the end of the month, end of the quarter rebalancing, excuse me, skewed the volume overall, but still, if we can analyze this on price action alone, what we have here is an index that's rallying right up to the 50-day moving average. A strong close above this average line, along with the S&P 500 and Dow Jones Industrial Average closing above the 50-day moving average, would switch our market model back to neutral. However, the intraday action reversing a little bit off the highs and the failure right at the 50-day moving average indicates that the market might want to find some resistance here and head lower. The only problem that I have with that is that there were a lot of stocks with very bullish technical setups and or technical price and volume moves today that makes the overall action confusing, which continues the theme since May 22nd that I indicated what we were going to probably see. So the mixed signals continues to mean to me that you need to take it easy here. Small positions, no 5% long something, no 10% account capital goes into this long. It's while we're under sell signal, whenever we get these long signals, we're going to have three of them, as you're going to see here in a little bit. It's going to have to be 2%, 1%. When we get back into neutral condition, when we have some of the signals that you're going to see, you could increase it. But right now, the way that the market's set up, this is a dead cat bounce. The volume is lower than the sell-off before. Unfortunately, for those of us that have studied price and volume going back to the early 1800s, and on some charts that we have available, data available to us from England, we can go back into the 1700s, into the 1640 Holland tulip bubble. This is normally supposed to be a bearish setup, but it might be bullish in our new market environment. But let's take a look at the New York Stock Exchange, still well below the 50-day moving average, and the S&P 500 finding that resistance right at that line. The Dow Jones Industrial Average, which I just showed the Dow Jones Transports, which, whoops, similar thing, still finding resistance right at that 50-day moving average. The only index not doing that's the Russell 2000. However, even though it's good seeing this thing lead, and it could be indicative if we do rally higher with these nice charts that we're seeing, a good sign that this index is leading, and it might be indicating to us that we are going to rally higher. Nothing says that we can't rally like another 10, 20% before all hell breaks loose and bond yields rise further and bonds decide to fall, and or nothing says that bonds can't continue to rise and yields can't fall to below 2% again. So you got to keep everything open and just have a game plan for everything. Mine is new highs in the indexes, buy mode. Mine is above the 50-day moving average on all the indexes, back to neutral because this is summertime and historically follow through days and buy signals do not work in summertime, so we take that into account. So Russell 2000 alone isn't enough to switch the model, and that's why we remain under a sell signal, but it's something to watch. Notice the TSV and MACD lines on the indexes, though, also indicate that we have reached some kind of short-term bottom and should continue to rally further. The price action alone, though, indicates that we should fail. So mixed signals, mixed signals, mixed signals. That's why I'm neutral. However, being neutral, we still have one sell signal. FLT is closing below the 50-day moving average on heavy volume. That is the first close since the most recent ad signal, which is back here in May. So that's going to be a 25% sell signal. We are still long since September back here. And what would be amazing is if that initial signal 2012 would have been good and we probably wouldn't have had such a rough 2012, we'd still be sitting on a stock with 161% gain. But even still, for over a full year of holding a stock, if that was the case from our quote perfect signal back in early 2012, which is the last one that we technically got, LQDT, and some of the others later on aren't quite as nice as this one, we should have had a 200, 300% gain. So that's just the kind of market that we're dealing with. And then on the other end, the buys are like this. The best setup tonight is in Value Vision Media. The recent earnings per share and sales growth in the most recent quarter is extremely strong. 2014 has got some very large estimates coming, so the numbers should continue to increase here. Excellent move today. Excellent price and volume signal overall. The only problem is it's coming on an EOM, EOQ basis, so it could easily fail because it isn't just a strong price and volume news on no news. It's coming on a day of rebalancing. So if this also would have been last week on Friday and you would have gotten this volume signal, the same thing. So take this long signal, with a grain of salt. But it's 2%, 2% because the setup is fantastic. Reward risk ratio is wonderful. And on that same note, also Trulia. It just recently bought LEDR, and LEDR's move made me check that out because I knew it was probably being bought out at May. Went to go see who was buying it out, TRLA, and at the same time, TRLA was already giving long signals in other scans before I decided, yeah, definitely let's make this a new long signal. So TRLA, big mutual fund growth, big sales growth, earnings are turning positive and will be positive, I do believe, by next quarter and should continue to grow into 2014. Excellent previous price volume action, low volume on the pullback, and a retake of the 50-day moving average right here on strong volume. So this should hopefully work. If it doesn't work, we're only risking 3%, not a big deal. And then one of the best stocks tonight, CCF, Chase Corporation. Huge earnings, huge sales growth, mutual fund growth, excellent price volume signal. The only problem is, see that big volume surge today? Still, it was only 80,000 shares. This thing only averages 10,000 shares. This stock could probably easily go from 22 to 44 if we have another uptrend, but you can't get that long because it's small. Therefore, it's 2% in the non-risk account, limit orders, and then 0% in the risk account. So VVTV, excuse me, pressing the wrong buttons. VVTV, very, very, very nice, but it's coming on today. TRLA, very nice, but it's coming on today. And then CCF, you got three very strong signals, and that's confusing when you got a tape that's indicative of resistance right at the 50-day moving average while we're under sell signal. So summertime fun. Enjoy your holiday shortened week, everybody. I believe the market's closed on Thursday. I don't know what we're doing on Friday. I assume it's a full session. I don't know. I haven't checked it out. I basically am already kind of checking out for the summer, and by that I mean not taking anything too seriously here. After Labor Day, if we decide to break out or break down, that's probably when the big money's going to come. But don't forget, in 2011, the biggest trend following move and the only money making move and the sell signal that was huge, but it was one of the first sell signals after my backtested methodology to trigger that I did not take, produced one of the biggest gains that happened all year. So don't forget, that move happened back in July. So here is, it started to break down in July and it happened in August. So in July doesn't mean it's going to happen this holiday shortened week, but just keep that in mind that in 2011 the big trend following move in the summer was to the downside. So we'll see if that happens again in July to August. But overall, you can see from June, July, from that year, from to March, it was choppy trading then. And it's pretty much choppy trading now, and that is where we are at in this market. Have a great upcoming week, everyone.